Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Obviously, really the big news is the US presidential election with former President Trump being re-elected to the White House. Now, the Republicans have also got control of the Senate as well. But as yet, the House of Representatives is still up in the air. If the Republicans do get control of that, they would then have a clean sweep. And that will obviously make it a lot easier for Trump to get his policies through. Potentially, it does raise more questions than answers. Trump has been very keen and really dogmatic on tariffs. Which is obviously inflationary to the global economy and certainly the US economy. Because despite what he says, the country of origin doesn't actually pay for the tariffs. If there is a tariff placed on goods coming into the US, it's the US consumer that pays for it. Now, also as well, obviously, with his sort of tax cuts and his economic policy, most analysts and economists have predicted that's going to increase the deficit by conservatively around sort of 4 to 5 trillion. On the higher side, they're talking about 10 to 12 trillion dollars. So what's really very interesting is the 10-year sort of spiked in the last sort of day or so. That's up at 442. The 2 years up at 427. Now, if you look at those rates, sort of 2 to 3 weeks ago, 10-year was trading close on 4%, and the 2-year was below 4%. And then just to make it more interesting, you've got a Fed meeting as well, where potentially they're looking at cutting interest rates again by 25 basis points. The Fed has sort of signaled that they are on a rate cutting cycle. But, potentially with Trump now in the White House and the inflationary implications of that, rates have certainly spiked higher on the back of it. But it's going to be pretty interesting. I mean, initial reaction from equity markets, the Dow's traded up over 1,000 points. Potentially because we're not going to see such a huge increase in corporation tax in the US. But I say potentially for global trade in terms of tariffs, it does make it a lot more difficult. But on the recent data from the US, it's been pretty encouraging. Inflation was down, latest PCE readings was down at 2.1. The GDP data was again encouraging, slightly missed the mark at 2.8 versus 3% expected. But then the employment data was really very weak. That came in at 12,000 for October versus expected around sort of 100 to 120,000. But then that number was impacted by the Boeing strike and also the 2 hurricanes as well. Now it's going to be interesting now to see how the various legal challenges towards Trump sort of play out. The 2 cases he's been found guilty of in terms of the business fraud, inflating the books, and also the defamation character as well. He's been found guilty of those, so he's just waiting to be sentenced. And a strange irony as well, before the election, he was talking about sort of voter fraud and, sort of irregularities in the voting. As soon as he was leading in most of the sort of swing states, those accusations just disappeared. And quite what it means for Ukraine and also the conflict in Gaza will just be very interesting. Now, I always come back 72.50 and change. Now, in the UK, it certainly was a pretty tough budget, but maybe not as tough as first anticipated. They are going to raise quite a bit of sort of excess funds out there, but there is a big hole to fill in the public sector finances. but still expecting the Bank of England to cut rates further. Now in the EU region, a very nervous time with Trump getting re-elected, potentially sort of tariffs, etc. And also as well, the NATO alliance as well is just going to be very interesting to see how that plays out. Trump in the past has been, never a big fan of NATO. And also as well, obviously, there's grave concerns over what will happen with Ukraine in terms of US support. You suspect Putin to be pretty happy that Trump's back in the White House. Now in Australia, no real surprise. The RBA left rates unchanged. Cash rate remains at 4.35. But what is encouraging, the latest CPI data, that came in at 2.3. Now that's back within the sort of 2 to 3% band that the Reserve Bank is trying to sort of target. But potentially you're still not looking at any rate cut in Australia until sort of February of 2025. But certainly recent data is showing sort of improvements. Retail sales were up, and also the latest sort of business and consumer confidence surveys were up as well. Now in New Zealand, the latest ANZ business confidence was up and showed the highest reading since 2014. Now again, with that spike in US interest rates, it's going to be interesting to see what the Reserve Bank do later this month. Most people expect a 50 basis point cut, but given the weakness in the economy, it's now looking potentially like a 75 basis point cut could be on the cards. Because after the end of November, the next meeting for the Reserve Bank is not until mid-February 2025. And certainly the New Zealand economy desperately needs a boost. But on the export side, the US is New Zealand's second highest trading partner. It's just going to be interesting to see how that plays out, potentially with these tariffs that Trump has sort of been touting coming into play in sort of January of 2025. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I'm looking forward to speaking to you soon.